and then we'll let the public make its own decision on whether or not to buy your stock.
So there was mania last time, but Henry, from what I'm hearing from you now, there isn't mania now, and there's something that's different. There's actually a backlog of highly profitable companies. So you don't anticipate us having a massive, bubble bursting like we did last time?
Listen, if people are so hyper aware of bubbles now. We had the tech bubble, we had the housing bubble, and now right away, the moment you get some excitement in early stage angel companies and LinkedIn, obviously, people are immediately just charging in and saying it's obviously a bubble. This is debasing the term bubble. And I don't mean to suggest that LinkedIn wasn't overpriced when it traded on the first day. I think it obviously was. But you look across the technology sector in general, look at the hottest company on earth, Apple, is trading at about 15 to 16 times trailing earnings, not revenue, and real earnings. And so to look at that and say it's just obviously a bubble is just ludicrous. You go back to the 1990s and Cisco, which was a very mature company in those days, was trading at 80 times earnings at the peak. So it's just not even comparable at all. Now, you look at LinkedIn and say, well, isn't that obviously a bubble? I think anybody who actually looks at LinkedIn and tries to figure out what the company's worth is faced with the problem, which is how big is it going to get over the next 5 to 10 years? And that's always very hard to tell. And I wouldn't have touched the stock the first few days. It was an extreme valuation, but there are scenarios that could support that valuation. So I think people are just a little bit too quick here to charge in and say it's obviously a bubble just because you had one tremendously successful IPO.